Welcome to the Utah Homebuyers Quest podcast with Nelson Bars. Our mission is to give you hope, knowledge, and encouragement on your quest for home ownership.
Housing affordability is at its worst point since 1986.
Higher mortgage rates are impacting Utah's housing market. Potential buyers out there being priced out.
It's getting tougher by the day to afford a home.
Many factors are making it very, very difficult with no relief in sight.
Homeownership may seem like an impossible mountain to climb in today's world. We're here to say that it is possible, and we're here to be your guide, to climb with you, to urge you forward all the way to the closing table. We believe in home ownership, and we believe in you.
Well, hello, home buyers, and welcome back to another episode. I'm Nelson Bars. I am a mortgage broker here in Utah, and I help people buy homes, and I'm excited to help you on your noble quest to become a homeowner. Today, I want to talk to you about the single best financing option that I know of for first-time buyers. As I've said before, part of my job is to help my clients find the very best financing that they can qualify for to get their home. My work is to help them get the best interest rate, the best fees that they can get. And I spend a lot of time researching. I'm trying to learn the whole mortgage market every day, constantly reading industry newsletters, product announcements from all of the many lenders that I work with, underwriting guidelines, and working to make sure I'm up to speed as abreast of the market as I can be for my clients. I go to conferences, I try to learn where our industry is headed, and I do all of that to help my clients and to be competitive. I have to be competitive. I have to be able to give you the best deal I can. Today I want to share with you the best option I know of. This is Plan A when I meet with my buyers. And if we need to, we can look into Plan B. We can go there. But Plan A right now for me is the 1% down payment conventional loan that's currently being offered by the nation's largest wholesale lender, which is UWM. In truth, it's a 3% down payment conventional loan, but we pair it with a lender-funded grant of 2%, up to $7,000 maximum. This means the lender is tripling your down payment. And I want to give you 7 reasons why I love this program as compared to all of the other programs out there that we have access to. Starting off, number 1 is that it is a true grant. It doesn't have to be paid back. In fact, the first one that I closed, I was sitting at closing and I was waiting for a document to come up in the stack that talked about the grant, and there was nothing in there, not a single paper about this $7,000 grant. All there was a $7,000 credit on the settlement statement with no strings attached. I want you to understand how rare that is. The word grant is hardly ever used in our industry anymore. They call it down payment assistance because almost all of them have to be paid back when you sell your home. It used to be that most of the cities and the county programs had a way of forgiving the debt from the down payment assistance over a 5-year period, but that's pretty rare now too. Almost all of them, the only one I'm aware of that doesn't have to be paid back besides this is a veteran's grant that we can get you for $2,500. Everything else that I know of, all of the $20,000 from the state, the $50,000 from Davis County, $40,000 from Utah County, any of these programs, they're just lending it to you, and you have to give it back when you sell the home. So number 1, that's the biggest thing. It's $7,000 of free money. Number 2 is that it's available in every county and every city. There are no geographic restrictions on this program. You can get pre-approved for this program, and then you can go anywhere in the state to find your home. And that is not the case with other programs like USDA. That's 100% financing, but it has to be out in the rural areas. And almost all of the grants besides that come from a city or a county. So you have to limit your home search to the areas they want to incentivize. There's one that's statewide from the state, but it has to be a new home. And this does not have to be a new home. It can be a new home. It can be an existing home. It doesn't have to be rural. It doesn't have to be in the city. It doesn't have to be in any specific county. So I love that. The only other program that I'm aware of that works statewide on new or existing homes is Utah Housing. And in a moment, we're going to talk about how this program compares to Utah Housing. Okay, number 3, I love this program because it is actually attainable. This program actually works, and we're closing them for qualified buyers. Some of the other programs, like the Davis County and the Utah County ones, they sound so good on paper, but they have impossible income limits that exclude almost all the buyers, and the ones who meet it are forced to buy very small condos or townhomes in order to thread the needle, because they also have debt-to-income ratio limits. So you have to make enough to qualify, but you can't buy too much house because the super tight debt ratios. And if you make a little more than enough to qualify, you make too much to get the grant. So what's interesting about this program, this 1% down payment program, it does have income limits, and it's the same income limits that make the other programs hard, but there's a difference. First, let me show you what the income limits are, and then I'll explain why this 1% program has some flexibility. So these income limits are based on the area median income for the area. Those are updated annually, and the rule is that you have to be below 80% of the median in your area to qualify for this grant program. Okay, so here's a glimpse. You can look these up yourself if you want to look at the exact area where you're hoping to buy. Just go to Google and type in home possible income limits and use the Freddie Mac lookup tool. But let me just go over this. The main 4 counties where most of the people live, Davis County has a limit of $98,480. That's the same limit for Weber County. So if you make less than $98,480, you'll be eligible income-wise for this grant. Salt Lake County is $97,200, just a little bit lower, and Utah County is even lower. It's $94,960. So basically, if you make less than $95,000, $98,000 a year, then you're eligible for all kinds of down payment assistance programs, right? They're all kind of open to you, and I'd love to talk to more people who make less than this. A lot of those people count themselves out, and those are the ones that we just can help so much, right? So if anywhere under that level is a good time to look at buying a home. Okay, so here's where the 1% program that I'm espousing here is different. With this program, they only look at your qualifying income, not your whole household income, for calculating that income limit. Almost all the other down payment assistance, they want you to disclose all of your household income. This means if you have teenagers who work in the home, you have to count that, right? If you have a side business or a spouse who works, or if you have overtime or commissions, it all has to be counted. And if you're over the income limit, you can't have the down payment assistance. What I love about this 1% down program is that we can exclude some of your income to keep you under the income limit as long as we still include enough to qualify. So here's an example. I had a recent client, a couple, who was literally $200 a month over the income limit for this grant. We had the husband, he was working on a base plus commission, and both of those were, couple $1,000s a month. And then the wife was working on hourly. She was part-time, plus she had some incentive pay that was like $200, $300 per month. So after what we do is we review their pay stubs, and we separate all the line items, base, commission, salary, overtime, all these different line items. And we had 4 line items laid out in front of us, and we purposely excluded her $300 a month incentive pay. And they still have enough to qualify to buy the house they want, but now they're no longer over the income limit. So this level of flexibility allows us to get more people under the income limit and qualify for this grant. We can leave a spouse off the loan. We can leave out your overtime. We can leave out your commissions. If you have any little side categories, side businesses, we don't have to include them unless they're negative. If they're hurting you, we can't hide them from the lender. But the lender knows we do it. We show them all the income, and then we say we're choosing to exclude this level, this piece, so we could stay under the limits. So it's great, and it actually is working out for a lot of buyers. So number 4, the reason I love this is that the interest rate and the monthly mortgage insurance actually go down when you qualify for this program. One of the big problems with many of the other down payment assistance programs out there, and this includes Utah Housing, Chenoa, and more, they all come with a higher interest rate and some downsides on the mortgage insurance as well. that, it's a higher rate than you could get if you had your own down payment. This program is a conventional loan, and if you meet the income limit for that grant, you're also going to meet the requirements for the discounted rates that come when you have a home possible mortgage or a home ready. These are first-time buyer programs through Fannie Mae and Freddie Mac that give you lower rates and lower mortgage insurance as long as you're under that 80% of the area median income. And while we're on the topic of mortgage insurance, remember that conventional mortgage insurance is removable without refinancing. If you go with an FHA program or USDA, anything else that's a government program, which a lot of these down payment assistance programs, especially Utah Housing, come with, those are not removable. You have to pay to refinance your loan again to get rid of the monthly mortgage insurance. Okay, now kind of related is number 5. This program does not come with any upfront mortgage insurance. The other great thing about conventional versus FHA is this, right? FHA has a 1.75% upfront mortgage insurance fee. So let me just show you a simple example. If we're going to compare Utah Housing to this program with 1% down, let's say you're buying a $350,000 house. Utah Housing mostly comes with an FHA loan. So they're going to lend you the down payment money, and then they're going to add another $5,900 in FHA mortgage insurance rolled into your loan on closing day. So on day one, you owe $355,900 on a house that you bought for $350,000. So you're over 100%, right? And probably actually you'll end up owing more than that because Utah Housing allows you to roll some closing costs into your loan too, and a lot of people take advantage of that. If you use the 1% down program, they're going to give you $7,000 of down payment instead of lending it to you, and they're not going to roll in any upfront mortgage insurance. So on the same house that's worth $350,000, you only owe $346,500. And that's $9,400 better, right? That's $9,400 more equity that you're going to have when you sell the house to move up to your next one. And on top of that, your monthly payment, honestly, is probably $150 to $200 a month lower for the same house. So the lack of upfront mortgage insurance, the absence of this huge $6,000 plus fee, is a great reason to go with a conventional, with a program that gives you down payment assistance grants instead of lending it to you as well. Number 6, this program pairs with the 2-1 buy down. You'll remember back in episode 11, I taught you about temporary rate buy downs. The most common version of that is the 2-1 buy down. This is where the seller pays some fees to allow you to have 2% off your rate for year 1 and 1% off your rate for year 2. Incidentally, most people who are taking this program, they're hoping to entirely avoid the rates in the 6s by refinancing their loan to something in the 4s or the 5s before we ever get to year 3. So doing this temporary buy down can save you $300, $400, even $500 a month off your payment for the first year or two, and it really does go a long way to help make homeownership attainable. So the problem is many of the down payment assistance programs, not all of them, but certainly Utah Housing, and also there's the Simply Solar program that we're going to talk about soon, they don't allow you to do temporary buy down. It's not available as part of that program. Okay, number 7, the last reason why I love this 1% down program, which is really a 3% down program, is that there are no roadblocks to your future plans to refinance. Most buyers today are planning to refinance as soon as possible to a better interest rate. That means going to a conventional loan. The problem is that you need 5% equity to do that. So when we refinance your house, we'll get an appraisal, and we can only lend 95% of that value if you want to go to a conventional, and 96.5% of that value if you want to do FHA. Now, we're going to probably want to roll in the closing costs to your loan, so you actually need a little more than 5% equity to pull off this refinance. So with this program, remember, it's 1% down plus 2% down from the lender, so you only owe 97% of your purchase price, it's probably reasonable to expect your home to appreciate enough in a year or so to get to the point where you have 5% equity, and you can take advantage of these lower rates that we all hope are coming soon. If you get a down payment assistance from the cities and the counties, or if you use Utah Housing or Chenoa, or especially this Simply Solar program that I'm going to talk about next week, you'll probably start out owing at least 100% and sometimes way over 100% of your home's purchase price, which means it's going to be a while. You may have to wait 2, 3, 4 years to be able to refinance. That's 2 or 3, 4 years of making a much higher payment than you need to because you just don't have enough equity to refinance to a conventional loan, and you're just waiting, right? So, I mean, you can always do an FHA streamline if you're stuck in an FHA loan, but the goal is to get to conventional for most people because they want the removable mortgage insurance and they want to avoid the upfront FHA fees being paid over and over again, right? Okay, so those are the reasons why I love this 1% down program. I do want to take a moment, however, just to emphasize that although I see this as plan A, there may be reasons why a different program is right for you. If you can thread the needle and qualify for the Davis County or the Utah County programs, you might get very excited about those. Those are big dollar amounts, $40,000 or $50,000 programs, $50,000 programs. They do have to be paid back, but they can make your monthly payment really attractive while you have them. Those are also going to pair with conventional loans. They allow you to do a 2-1 buy down, so those are exciting. It's just hard to thread the needle. If your credit is low, you probably can only do FHA, or at least when you see the way conventional mortgage insurance goes up way higher for lower credit, you'll be glad that you have FHA as an option. And if you're over these income limits, you can still do the Utah Housing program. They have even better income limits. And even though it is a more expensive program and you'll have to wait a little bit longer to refinance, I still think you'd be better to do that than to be a renter. Nothing's as expensive as renting, right? Becoming a homeowner is very powerful, and I've had many clients succeed with Utah Housing and never look back with any regret. In the end, however, I see the 1% down conventional as an awesome loan program for first-time buyers. It's a true grant, up to $7,000. It's available in every city and county in the state. It has the flexibility in its income limits to make it work for most people. It comes with really good rates and mortgage insurance, and the mortgage insurance is removable without a refinance. If you don't want to refinance, you don't have to on that program. It avoids the big upfront FHA mortgage insurance fee. It allows a 2-1 buy down to make the payment more reasonable during the first couple years. And finally, you will start with 3% equity in your house instead of being upside down. That protects you both from disaster. If you have to sell and you're upside down, that turns into a short sale foreclosure. It's all really risky. This protects you from disaster, but also gives you the ability to refinance as soon as rates go down, which hopefully will be soon. I would love to help you look at this program and see if you're eligible. I mentioned at the beginning that part of my job is to know the mortgage market. The other part of my job is to get to know you and your story and your qualifications so that I can teach you what the best options are for you. And I just want to remind you that it's free to schedule a consultation with me, and we don't charge any origination or broker fees to be your broker. All of our compensation comes at closing from the lender who buys your loan. So if you'd like to meet with me, I would love that. There's a link in the show notes where you can book time with me, either in person in my office, which is in Layton, or over the phone. Anywhere in the state of Utah or Idaho, I can certainly help you. Or we can do a Microsoft Teams meeting to get to know each other and look over your mortgage options. So anyway, there you have it. The perfect recipe, 1% down conventional with a 2% grant from our great lender, UWM. By the way, that program is only available through brokers. UWM only works with brokers, so you won't get that going to a bank or a credit union. So I'd love to help you. Thank you so much for listening. Thank you for taking another step on your quest for home ownership, and I hope we can do it again soon.
Thank you for listening to the Utah Homebuyers Quest podcast with Nelson Bars, your place for a strong dose of inspiration and knowledge so you can stay on top of your quest for home ownership. If you have a question or comment for the show, we'd love to hear from you. Visit homebuyersquest.com to record a voice memo or submit your question. You can also join our Facebook community to interact with experts and fellow travelers. Search Homebuyers Quest on Facebook to find the group and join the conversation. But with just a simple click to subscribe, we'll invite you back to the next episode. And remember, we believe in home ownership and we believe in you.